On the 10-year yield, this morning will be the panic attack for those macro tourists that, unfortunately for them, still watch CNBC and whatever else. And they're just realizing that interest rates are breaking up. It's been up, and away since we said interest rates were going to break out to the upside in quad 2. At first, slowly, then all at once. 10s, 2s on the curve, by the way, this morning is at a new cycle high in as much as the long end of the curve is. The split between the 10-year yield and the 2-year yield, that is 125 basis points. Commodities continue to make a series of cycle highs. You're not going to get to buy commodities because commodities are all up this morning. And again, you as a full cycle investor, of course, are not just long stocks, you're long commodities and commodity-like stocks. So again, if you look at the CRB index last week, it was up 1.8%. Whereas the S&P was down 0.7%. Also, if you look at copper, I mean, look at it this morning. I mean, that's called going vertical. It was up over 7.5% last week alone. It's up again this morning, making a new cycle high. Point number 3 on that front on stocks is pretty clear. I mean, at the end of the day, what you don't want to be long is a certain kind of stock when interest rates are up. It was a weekly loss for consumer staples of 1.1%. At the same time, utilities were down 1.9%. But at the end of the day, being long energy has absolutely pulverized being long SPY, or God forbid, you're long consumer staples and utilities, which are, of course, shorts in quad 2.